Good morning. It is Saturday the 14th, 2024, and it's a Wall Street Weekly wrap-up with your host, John Newquist. What a week. It is like a mirror on one side red. This week's the mirror is green, and the bulls are in charge. Next week, we don't know, but it's getting close to a rate cut, and everybody's waiting for it. Of course, they've been buying it all this week. So, start out the week with J.P. Morgan. Jamie Dimon said, the net interest incomes are too high, and we see the trading revenue, all the trading they do, toward a 10% decline, so it just dropped. And that sounds great, except that JP Morgan a couple weeks ago hit its all-time high because financials have been running this summer. Like they got in, put their track shoes in, beginning of the year, and it's been just solid up. So it dropped from $230 to about $200, and a lot of people are like, oh, why did I buy when it was at the high? Well, that's a good question. J.P. Morgan's been with us a long time. Good dividends and stuff. So we're going to keep it. Still the best. People are, buy Bank of America, Chase, and all these other, not Chase, but Citibank. There's some different ones, but we think it's the best. We always buy the best. Boeing. Well, I don't think we can do any worse than Boeing. Holy smokes. We nibbled in. I think we were like a tenth of a position in the thing, and we're not even probably going to make 20% in, So the FAA said Boeing must ensure safety processes are in place before the production cap will be removed. And, of course, then the Seattle unions, no contract in 16 years, and the new CEO. Welcome to the fire. You knew it was coming. The union was not shy about telling them they were going to strike a long time ago because they haven't had no contracts. So what's a fair wage out there in Seattle? I don't know. So, like I said, we're at the lows. Look at this. We got the little bit of here. This is our double bottom. Everybody's hoping the rate cut will help Boeing, but we'll see. The strike could be ugly. Somebody said every day or every year they don't ship the stuff out of Seattle that's on strike is something like $300 million to the bottom line, for free cash flow revenues. So, wow. Going to be a lot less revenue if they ain't shipping planes. So that's not what we want in a stock that we own. So we want to have revenues increase, but I guess Boeing's got to get through. So we'll watch. Remember, we're going to clear out the portfolio of any kind of dogs that we might have around about end of November, then buy into the strength. And again, the market, well, look at this. We got about a 5% gain for a lot of things. Russell is doing well. Kind of up again. This has been one ugly, choppy chart. Of course, Tom Lee said it was going to be up 50% this year from January, and I just don't see it because this would be 2,100. Oh, what happened here? Come here, back here. This is about 2,100, and it'd have to be around about 3,000. We're not even close. So, Mr. Lee has done exceptional, but I think overall performance of the things that he doesn't deal with, like Russell 2000, and he's watching it, is going to go. Will it be at 20% this year at the end? I don't know. But look at the NASDAQ and S&P. Boy, what a run. 5 straight days up. And again, there's nothing else but this chart. Boom. Gold, $2,600. All-time high. We bought it at $1,600, $1,700. And we held through this choppiness, but boy, you're doing well. You got gold. It's always going to be money. Silver, of course, went over $30. Remember, it was like $28 the other week, And the copper, it's still not high, but it's over $4. Everybody's happy. Oil still below 70. Of course, that's going to tank our Exxon and Conoco, but everybody's happy at the pump. It's down to $3.39. 50% of the country is below $3. So we're that part that is not below $3. GameStop, 13% earnings. I thought, and they're profitable, and I'm thinking, wow, what are they doing? I guess they cut a lot of cost, but the stock, it's still doubled from $10, went up to 64, down to 20, but you doubled it if you bought it before Roaring Kitty did. And I just don't know what GameStop's doing. It's one of those stocks that, oh, well, revenues fell. Well, that's not going to meet our criteria of positive growth, so that sounds like it cut a lot. Nvidia, oh my God, Jensen Huang was like on fire. Man, on fire. At the conference, says demand's great, trying to fill everybody's needs. It's tense because people are mad that they can't get these chips because they want to do these projects and they can't get the chips. And Blackwell, after the H100 is the Grace Hopper. The Blackwell's the next one. It's going to scale in the next year. They had the congressional hearings on AI and talking about what we're going to do about it. And of course, he said, I think the days of every line code being written by software engineers are over. There are a lot of software engineers out there. I'm sure that's like, but no. Is one person who I know personally, one of the best software engineers, said, yeah, it'll write the code. I just got to spend days correcting it. But it saves me hours. But I'm just correcting code now. And that you still need to have the talent. It's like you got the great American novel, but it's got typos that it can't catch, or word sentences that don't make sense, or they're using instead of hot, they want hit, things like that, where it won't show up as a spelling mistake because hot and hit are the same. So it came back. He came back, totally. He came back. Look at this. This is a wedge, and it's going to come up, and it's going to break either downward or upward. This wedge is not going to come out. Probably another 3-4 weeks. We'll see. China, oh my God, it's collapsing. I can't believe it. It's the lowest set of stocks. We have the China fund, and it's. I should have probably put that chart up there, but I just showed this index because it's the lowest since 19. They are having a problem. They're going to raise the retirement age. They're having problems with real estate just sitting there, can't sell it. And, and of course, one of the things is they really spent a lot of money on the military when they should have been probably taking care of their economy. And, we do that too. We spend a lot on military, but, they are trying to help the economy. The economy here is good, so what's going to get them to buy? They're trying to ship every across the world. And if, either party gets in, they're all talking some tariffs of some kind on China. Not, that's why I said they got a problem. I think they're going to have to back off on the military spending, start taking care of business at home, because Taiwan is never going to invade China. So you maybe just put on your big, bluster and just try to save your economy, because those like the unbelievable collapse. This is like a ugly schizo, boom, 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 bouncing and hurting every way down if you're a China investor. Nextera, oh, it's a utility. Oh, it's a boring stock. If I would have took the word Nextera out and I says, here's your stock and it's going to shoot up like a tech, that's what it is. Now, of course, is Nvidia, number one stock in the S&P 500 year to date. Number one, not number 5, number 1. Do you own it? I hope so, because you made money just like we did. Look at this. It's doing great. Remember, that's what balance is. Nobody said, beginning of the year, I think utilities will be the best stock because it's going to be a defensive market. No, that's not what they were talking about. They were talking about, recession and other stuff. But remember, Nvidia and Nextera, both charts are good. Walmart, holy smokes, look at this thing. I remember when one big prognosticator sold it at, let's say it was split adjusted almost like a 3-to-1 and stuff, but, he bought it sold it when it was down way back over here, but 2 years ago. He got rid of it. I'm tired of this. And I was like, well, it's COVID. Everybody's trying to get through COVID. The inventory's up everywhere. So, but Walmart, we like it because it manages it. It is the pulse of the economy now. People are going to Walmart instead of Dollar Tree. Can you imagine that? They're going to Walmart, and it's showing. Dollar Tree's doing bad. Who's beating them? Walmart. Family Dollar doing bad. Who's beating them? Walmart. Your high-end retailers, Home Depot, Target, who's beating them? Walmart. Why? Because it seems like they've embraced AI, and they've got the ability to tell what people want, and they didn't price gouge like Kroger said. CEO says, yeah, we did kind of price gouge when supplies were short. Yeah, well, that's okay. I mean, it's over. People are just going to Walmart now. You're not going to get that business back because, they got a lot of stuff. And they deliver. Oh, my God. It's just, I don't want to say it's like Amazon. But you order on Walmart, you're getting it just as fast as Amazon. And they ain't even got the trucks, So remember, the Post Office, FedEx, and UPS are always glad to deliver for Walmart. And Uber going to go into Waymo. Remember, who owns Waymo? Not Baidu. Baidu's number 1 autonomous vehicle. Number 2 is Waymo. San Francisco, it works. San Diego, it works. I think it's San Diego, one of the Sans, but it's Google. Google is a big investment in Waymo, and Uber's going to do expansion. You're now going to get a Waymo vehicle maybe in Atlanta or Austin. This is a direct dig at Elon Musk when it's in Austin. That's what headquarters of Tesla. You're going to put the Waymo vehicle right in front of his face every day? Because he's still talking, it'll be like next year, but next year, but next year, but next year. Oh my God, that's a big dig. And Uber's working with him. And you can see that little pop. That thing jumped. And that might be interesting. Now they're going to work with it, but the reason I look at it is that's a lot of drivers in Uber. I mean, thousands and thousands of drivers, and the people love the autonomous experience. You put it in there, it talks to you like a real person, and even though it's a car, it's. But the Uber stock has kind of been like, okay, if I bought it at the beginning of the year, I'm up maybe 20%, but it's really an ugly chart, and I don't want to buy a sloping downward chart, and the earnings have not been so good. So, but we're looking at it. I think dominant worldwide, and if they get this and they partner with their competitor, this is a good thing. Okay, we're going to look at the materials sector, the XLB and the ETF funds. Look at this. This is nice. This is a nice chart. Another one. Again, you come in there and it's a boring sector, and you came in, you bought it at 86, it's at 96, well, 92. It's not down. It's good. We owned Clorox, which had negative revenue, but I like Clorox because it dominates in sodium hypochlorite, bleach. It dominates. So pick at least, if you got to have a stock that's, good, pick a thing that doesn't have a lot of competition. And then FCX, number one in gold and silver, 17% run. But look at all these other ones. Holy smokes. There's not anybody else other than FCX that I call material. Things that you buy to make manufacturing, which then sells to retail. That's our three sectors that I divvied out. And so, these are different things. Steel market, X got, the Nippon Steel, but Nucor's not any better. Nucor's the best one. But, if these rate cuts go and the economy starts going, manufacturing coming, we're going to start buying probably Nucor because I think it's best in class on the steel side. And, it doesn't hurt to overweight. Remember, this is up, but it could be up a lot more. So let's take a look at FCX. Oh, well, geez, we bought this up here. It's been essentially flat the whole year. But number one in gold, it's going to catch up. Number one in copper, which is down. So gold is way up, copper's down. It's going to do well. So, and as they get better. But, I always look at this nice little chart here. It's been a slow sloping upward line. We'll get up above it and do much better. Clorox got rid of the vitamin division. Wow. I didn't know they had a vitamin division. You buy the stocks, you research it, you look at the money, you look at the runs, but I'm not that into, seeing every department revenue. So they liked it. They got rid of the thing, and it's up here at pretty nice chart. You go here and you bought it. It's now much higher. Pays a good dividend, so not a bad week. Oh, look at that green week. Remember it was all red last week? All red. Who do we own? Oh, we own Nvidia, up 15%. Up Microsoft, 7%. Google, up 4%. Meta, up 4.8%. Amazon, 8%. Wow, Walmart, up 5%. That's pretty nice. Biggest stocks, our biggest portfolios, did the best. And that's not so bad. ExxonMobil, of course, with low oil, is down. And JP Morgan, of course, it went down a massive 3.8%. Okay. But, this is an issue. Merck had an issue. I forgot what the Merck issue was. It was a minor issue. But, there's a good week. Enjoy the week. The Fed rate is going to go down. My money is on 25 basis cut because that's a perfect sign to the market. The economy is good. We don't need to go more to make it pump up. That's the perfect thing. I want to have people believe the economy is good, which is what I believe. And lower rates mean housing, which already is on fire this week. Of course, everything else was on fire, is going to go up. And rates will be lower, people buy houses, and it'll start to make a lot of things different. And then, like I said, everybody's gearing for the election. Once that's over, it should take right off. All right, with that, have a good week, stay healthy, and I'll see you next week.